Hello everyone, welcome to my channel Reckon Write Bookkeeping. Today we are going to talk about payroll tax in Australia. What is payroll tax? So payroll tax is a state-based tax on wages paid once thresholds are exceeded, distinct from PAYG withholding and superannuation. Who pays this payroll tax? So payroll tax is applicable to businesses exceeding state thresholds, including companies, trusts, and groups across Australia. So payroll tax is paid by the employers, by the businesses, and not by the employees. Understanding taxable wages. So wages encompass various forms of employee compensation. Right? So what is included in these wages? Wages include any salaries, allowances, bonuses, superannuation, any termination payments, and certain contractor payments that meet specific criteria is included in this so-called wages, right? And it is essential for businesses to recognize all forms of compensation considered wages for payroll tax. This includes not only direct payments but also any allowances and bonuses that could impact the tax calculation. Payroll tax thresholds. Each state has unique payroll thresholds based on their local regulations. So all the states in Australia will not have the same thresholds. Each and every state will have different thresholds. So it's important that you understand the threshold in the state that you are currently in. So for example, New South Wales has a threshold of 1.2 million, while Victoria is 1 million. Likewise, each and every state has different thresholds. It is crucial to regularly check the State Revenue Office for threshold updates and changes to avoid compliance issues. Payroll tax rates by state. So like the thresholds also vary by state, even the payroll rate also differs. So we have states with just 4% payroll tax, and then we also have states coming up to 6.85, even in between 5.5. There are states that have payroll taxes of this rate as well. So each Australian state has different payroll tax rates that apply to businesses. Some states use tiered systems where the rate varies based on total taxable wages, encouraging compliance. Grouping rules. So group businesses share a single payroll tax threshold. Businesses are grouped based on common ownership or controlled by the same entity. This means that all related companies or trusts must consider their combined wages when assessing payroll tax obligations. This could potentially lead to higher tax liabilities for grouped entities. Contractor payments and payroll taxes. So some contractor payments may be taxable based on their contract type. Many contractors might be classified as wages, impacting payroll tax obligations for employers. It is crucial for businesses to understand the distinctions between contractor types to ensure compliance with payroll tax regulations, avoiding costly mistakes and penalties related to misclassified payments. When do you need to register for payroll tax? You need to register early in order to avoid penalties and ensure compliance. Registering for payroll tax when wages approach the threshold is crucial for compliance. Delayed registration until year end can lead to penalties and interest. Early registration keeps businesses compliant and avoids unnecessary costs associated with late submissions. When do you need to lodge your payroll tax? So, lodgements and annual reconciliations are mandatory. The frequency of lodgement will depend entirely on state rules. The relevant state will mention liability thresholds, and if you meet them, you will need to submit either monthly, half-yearly, or annually. Reconciliation. At the end of the financial year, Businesses perform an annual reconciliation to ensure accuracy and compliance with state regulations regarding payroll tax, utilizing state revenue office portals for submissions. What are the common payroll tax mistakes? So, failing to register on time can lead to penalties and interest that increase tax liabilities unnecessarily. Not grouping related businesses may result in lost opportunities to maximize thresholds and minimize tax impacts. Excluding contractor payments incorrectly can cause miscalculations in tax obligations and potential compliance issues. Tips for bookkeepers. You need to monitor your payroll to maintain compliance and avoid penalties. So, a key tip is to track payroll monthly and keep diligent records of year to date wages to ensure accuracy. Payroll tax applies when wages exceed state thresholds. Rates vary by state. Regularly review contractor arrangements and maintain clean payroll reports for compliance. So thank you for staying with me till the end of this video. So like I mentioned throughout the video, there are different rules and regulations for different states. So you can find those relevant details in this business.gov.au page. I will include this link in the description. So you can go to this link, and when you scroll down, you can see you can click on your relevant state, and these would have the rules and regulations you need to follow for your state. It would have the threshold that you will need to maintain, and it will also have the rate you need to pay for your relevant payroll taxes. So thank you for staying with me throughout this video, and I hope this was useful and beneficial for you and you learned something new. So if you did, please like, please subscribe, and stay tuned for more. Thank you.